Good morning. Welcome Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of August 17th, 2026. Let's get started. SEAF signals for this week. We retain technology and financials, and we pick up healthcare. We got quite the skew this week with both technology and healthcare coming in 1 and 2, but with the same ranking. Technology slightly favored due to the 2 in the trading week versus healthcare's 3 in the trading week. Financials hangs on with, even though it's got a trading week of 11 with an overall score of 13, due to strong tactical month and strategic quarters. And we see energy come back into the picture, being a little bit held up by its strategic quarter here. This is obviously quite tight. Communication services and utilities remains at the bottom, though seeing a little bit of life. Now, looking heading into our heat map, looking at those numbers, after we get past really, outside of 1 and 2, and then subsequently financials at 11. Most of this is nearing zero. So a lot of this noise is mostly just lack of movement and not necessarily lower scores. For XLK, 0.25 on the trading week. That's pretty solid. Energy with our best score, 0.34. Not quite to that 0.4 range that we look for significance, but still close to that range. And then again, financials, negative 0.35 out of financials. That isn't a significantly large outflow relative to what we're seeing, but I think we now have back-to-back weeks in terms of seeing a little bit of weakness on the financials on the trading week, but we did have maintained that strength on the tactical month. We'll highlight that a little bit more in a couple of seconds with their rainbow charts. Last week, we had all up days in terms of assets flowing into the sector AUM. And we'll bounce back to the heat map in just a second, but I wanted to highlight we have some really strong acceleration here out of the assets under management. We have a lot of assets flowing into the 11 sector spiders. This is continuing on some strength, upward projection of the S&P 500. But again, yes, seeing really strong, starting to see that nice strong separation from that 21-day moving average, highlighting a positive outlook for the broader market. This has been a very interesting time for sector rotation. As seemingly we were starting to weakening a couple of spots here and here. We could see that a little bit on the price chart as well. Also dip below here on the 21-day moving average, but overall still trading broadly in this sideways range. We have broken up to the top side of this range, and that is on that strong assets under management. We have seen quite the acceleration going back to March of this year, coming from under close to that $320 billion mark through an accelerated up over 400 billion. This is all-time highs in terms of assets flowing into the market. So, despite this will she, won't she, technology's leading, healthcare's leading, technology's leading, and kind of acceleration in terms of how fast we're seeing money rotate through the 11 sector spiders. The broad trend here is that money is continues to flow into the market. And honestly, as long as we still see that money flowing into the market, it's going to be very hard to see a correction until that money starts to flow out. That means investors, managers are keeping their money in the S&P 500 stocks. And again, as long as they continue to vote with their feet and remain in, and we see things like we do right now with that 21, strong acceleration off that 21-day moving average, things are still looking relatively positive for equities. Just wanted to highlight a couple more things here. Like I said, we're seeing a little bit of life and energy from that 10 to 3 to 1. That's that positive skew we like to see. Energy is a little bit nerve-wracking, as it has to do less about the underlying technology like we have in technology or in terms of healthcare, seeing that, strength in terms of looking for that defensive, everybody gets sick even during a recession. We are not in a recession, but that's the kind of the theory, the case for healthcare being defensive. Energy is broadly being driven by geopolitics. I know I say this ad nauseum, but I just want to make sure you as investors understand that a lot of these movements are coming on tweets and what Washington is projecting, and not necessarily directly on fundamentals. So just kind of wanted to, that's my caveat that I've been bringing up. And then, seeing here at the bottom, utilities and communication services, I believe we got one of those charts here today, going to just highlight, how this model not only does well on the top side, but also helps you out on the reverse end of knowing where you don't want to be in terms of invested in the market. Energy, I just wanted to highlight energy here, kind of touched in that lower favored, would really need some strong aggressive acceleration to kind of get it up out through that neutral favored area. And very much, this is fairly choppy here. We get that relative outperformance, the war is on, relative underperformance, the war is off. And we kind of have that back and forth on and off, which is causing really a sideways relative performance market here going back since April. But, just seeing these little spikes in between kind of make this a little bit of a difficult play, not a SEAF signal. And even with the positive skew, I think we'll avoid the lead off on this one just because of the volatility here with energy. Healthcare remains, choppy itself. We kind of coming off and on, off and on, off and on. The one positive aspect that I would like to highlight here, though, is that these bottoms are growing ever so slightly and the tops are getting a little bit higher each time. So we're starting to see assets accumulate into healthcare with some pullbacks. Like I said, I think there's a real big push me pull you in terms of the broader market of understanding where we are in terms of, will we correct? I think, we're up. The S&P 500 is up something like 57% since last year, April of last year, which is a crazy move upwards. And I've said this in the past. In general, the S&P 500 is a mean reverting animal. It does not, it likes to stay, it gets offsides, and then it likes to kind of snap right back. We don't know when that snapback is coming. And I think some of this quick moves into healthcare is understanding that this snapback could come, and it could come quickly and aggressively, and managers wanting to making sure they're on sides are continually keeping an eye on healthcare while not making it their consistent leading investment. But again, we're seeing slightly higher movements in terms of its SEAF score, and that's corresponding with these moves in terms of relative performance versus the S&P 500. These bottoms are getting higher and higher each time, and these tops are topping up a little bit higher each time. So positive things looking here for healthcare. Communication services, I mentioned we wanted to talk on the flip side of this model as well. Mainly been staying in this avoid. We're seeing kind of peak here over, if you go back to the last 12 months of, December or November or December of last year, and a slow decline ever since, where we've been spending a lot of time in that neutral to neutral avoid, and you can see that relative underperformance is coming down. We do seem to be kind of creating that little bottom there, a little bit of support level in terms of relative performance. We had this kind of strong crash and seems to be holding sideways. We are still down. Nothing to do here. We're not going to try to be contrarian and say, okay, well, we must be at a bottom, let's buy. The money has not started flowing into into communication services yet. We are near, or if not at the bottom, and we have that strong underperformance versus the S&P 500. Communication services continues to be a void. And then just wanted to talk financials real quick. Financials still sitting in that favored, spending a nice chunk of time in that middle to upper favored. We've had a little bit of a pullback here, but seem to have a little bit of support on the relative performance side to maintain financials. Still in a relative uptrend going back to late part of May, early part of June. So relative performance wise, still seeing decent move upwards, but we are starting to pull back a little bit on this trading week. If this continues, financials will fall out of the top three, but we do have that strength that we're coming off of, where the last month and the last quarter we've had some nice inflows into financials. So this could be a little bit of a break, taking some profits after a nice little relative performance run up, or it could be a drift into the sideways. We won't know yet. Next week will be a real important number to see where these flows are coming to. Are we going to see that resurgence in financials, or is it going to start to kind of peel off and something will take its place? That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.